Bill Ackman's credit default swap in 2020. What if you heard that with just a $27 million investment, someone managed to earn a whopping $2.6 billion profit? It sounds too good to be true, right? Well, it's not. This is precisely what happened to one mysterious trader who made headlines in 2020 with their stunning success. And it doesn't stop there. This same trader placed a similar trade on the day Pfizer announced its new promising COVID-19 vaccine. So who is this mastermind? And how did they do it? This video will uncover the thrilling story behind this astonishing feat and reveal the secrets to their incredible success. Get ready to be amazed. Who is Bill Ackman? Bill Ackman is a prominent figure in the world of finance, renowned for his skills as an investor and hedge fund manager. He is the founder and manager of Pershing Square Capital Management, a hedge fund based in New York City with around $8 billion under management as of June 30th, 2019. Ackman gained widespread attention for his high-profile battle against Herbalife, where he took a substantial short position due to his conviction that the company was a pyramid scheme. He is also known for his famous activist moves in companies like Canadian Pacific Railway, Wendy's, and J.C. Penney. With a reputation as a savvy investor on Wall Street, Ackman has consistently outperformed the market, delivering returns of over 600% between 2004 and 2020. Whether it's his bets against struggling companies or his successful activist campaigns, Ackman's investing strategies have been closely watched and emulated by other investors. His track record has made him one of the most respected and successful investors in finance. Bill Ackman's gamble. Amid the coronavirus pandemic, the world's financial markets were in a chaos. As panic and uncertainty spread like wildfire, one hedge fund manager was determined to protect his portfolio from the looming crisis. That man was Bill Ackman, CEO of Pershing Square Capital Management. In February 2020, Ackman placed a massive bet against $71 billion worth of investment-grade bonds by purchasing credit default swaps, CDS. This is a financial instrument previously used by the famous investor Michael Burry to bet against mortgage securities in 2008. These financial instruments are insurance policies that protect against bond defaults, and the acquirer of the CDS pays an insurance premium. In the case of Bill Ackman's famous trade, he invested roughly $27 million to purchase CDS and protect his portfolio from potential losses. What's truly remarkable is that Ackman's timing was so perfect that he turned this $27 million investment into a staggering $2.6 billion profit in just 1 month. With the markets in turmoil, Ackman's bold move would be a pivotal moment in the pandemic's impact on the world's financial landscape. Before he even made a hit, Ackman had been working behind the scenes. In the early days of 2020, as COVID-19 began its global rampage, Bill Ackman, CEO of Pershing Square Capital Management, made a bold move to protect his portfolio from the impending stock market crash. Ackman invested $27 million to purchase credit protection, ensuring the portfolio against steep losses. The hedge proved incredibly effective, generating an astonishing $2.6 billion in profit in less than a month. In March 2020, Ackman appeared on CNBC in an emotional interview, urging President Trump to shut down the American economy for 30 days to slow the spread of the virus and prevent further economic damage. He also warned that hotel stocks were on the verge of collapse and that the US could end as we know it. While Ackman faced criticism for buying discounted equity stakes in the companies he warned could fail, he had already realized roughly half of the gains before appearing on CNBC. In a surprising revelation, Ackman later admitted that the film Contagion partly inspired his concern about COVID-19. The bold move. But that's not the end of Bill Ackman's remarkable story. As he started to unwind his CDS position and realize his substantial profits, he put that money to work in another brilliant move. Ackman began buying significant positions in blue-chip companies at heavily discounted prices, including Starbucks, Hilton, Burger King, parent restaurant brands Lowe's, and Berkshire Hathaway. But why? Anyone would ask that, certainly. Before we reveal that, make sure you're subscribed to our channel by clicking on the subscribe icon on your screen. You can also tap the bell icon to get notified when we drop our next video. Done? Let's go. Imagine this. It's a regular day and you're scrolling through your social media feed when suddenly you see a news headline that Pfizer has announced promising results from a vaccine trial. While this may seem like great news, Bill Ackman, the hedge fund manager and CEO of Pershing Capital, saw an opportunity. On that same day, he had purchased a whopping $8 million worth of CDS, which would pay out if companies started defaulting on debt. This was a third of the position he had made during the early days of the pandemic, and he felt that markets had become too complacent about COVID-19. In an interview with the Financial Times, Ackman stated that he believes the coming months will be ugly for the pandemic and challenging for the economy, with many businesses forced to shut down. He even went as far as to say that the Pfizer announcement was bearish news in the near term, as it could cause Americans to become complacent about mask wearing and allow the virus to spread even more widely. Now you have questions. You're wondering why anyone would use a CDS to make that money quickly. You want to know more? And we've got more to tell you. Why CDS? Credit default swaps can seem like a complicated financial product, but the basic concept is similar to buying insurance on your house against the possibility of it burning down. Like you pay monthly fees on your insurance policy, a buyer of a credit default swap pays regular premiums to insure against the possibility of a bond default. The beauty of a credit default swap is that it limits the buyer's potential losses, providing a safer alternative to shorting bonds or stocks, which can result in unlimited losses. By purchasing $8 million worth of CDS, Ackman could limit his potential losses to about $1.56 billion in the worst-case scenario. That's a much better deal than risking unlimited losses by shorting bonds or stocks. A credit default swap is a safety net against the possibility of a bond defaulting, providing peace of mind to investors in an unpredictable market. While you may only lose what you pay in premiums if nothing goes wrong, having that safety net in place can be invaluable in protecting your investments in the long run. The COVID-19 pandemic has caused chaos and uncertainty in the financial markets, with investors feeling uneasy about the future of their investments. As a result, the credit spreads have significantly been affected, making it a hot topic of discussion on Wall Street. Let's fuel your imagination a bit. Imagine you're on a roller coaster ride and it's going through a series of loops and turns that you didn't see coming. That's what it felt like for investors when the pandemic hit. The COVID-19 outbreak caused many industries to take a hit, which increased credit risk for companies. As a result, the yields on corporate bonds shot up and investors started to get nervous. They didn't want to risk losing everything. So they started selling their corporate bonds and investing in secure treasury bonds instead. It's like a game of risk versus reward. The government-issued treasury bonds provide a guaranteed yield over a 10 to 30-year period with a low interest rate, while corporate bonds offer a much higher result due to the higher risk. The problem is that the risk gets even higher in times of crisis, like the pandemic. That's why investors flocked to the safety of treasury bonds, causing prices to increase and yields to decrease. Meanwhile, the prices of corporate bonds dropped and profits increased, leading to a widening of the credit spreads. Okay, so you now know about CDS and how the pandemic was a lot of hot mess. Now, simplify Bill Ackman's strategy yourself. Picture this. A billionaire hedge fund manager enters into a risky bet with a hefty price tag. He stands to lose millions, but he's confident he's got this in the bag. He's betting on a crisis to hit, and he'll be raking in the dough when it does. The bet in question is a CDS contract, a fancy term for financial insurance against bond defaults. Our billionaire friend, Ackman, has to pay $27 million a month for 5 years for a total of $1.6 billion in premiums. Sounds steep? But wait, there's more. He's also hoping for the credit spreads to widen due to COVID, which would negatively affect corporate bonds. He's playing a dangerous game, but the payout could be enormous. Ackman will have shelled out a whopping $1.62 billion if he holds on for the full 5 years. However, the discounted value would be closer to $1.56 billion due to a lower treasury rate. Still, it's an eye-watering amount of money, and it's all riding on a bet. To understand why Ackman went with a 30-year treasury bond instead of a 5-year one, we have to break it down. The 30-year bond has a more extended period and offers a higher yield. It's the safer bet for an investor looking for the highest return without taking any risks. Treasury bonds are considered risk-free because they're backed by the US government, which is believed to be too big to fail. So, what was Ackman's strategy? He bet on credit spreads widening, and he was right. Credit spreads on the corporate bond index increased from 0.5% to 1.35%, earning him a nice profit. The 50 basis points BP spread he paid over month was equivalent to 0.5% of the notional amount he received protection against, which was $64.8 billion. In other words, he spent a small percentage to cover a much larger sum. In the end, Ackman's risky bet paid off, but it wasn't without its challenges. It shows that sometimes, the bigger the risk, the bigger the reward. That's about everything on one of the world's biggest financial gambles. We're sure you also learned a thing or two about how the financial world can be very crazy. What do you think? Is this a kind of gamble you can take? Leave your comments below. If you want to learn more, please like and make sure you subscribe to our YouTube channel. Believe it when we tell you we don't want you to miss our coming videos.